Welcome back to a Global Business Report. Still on our breaking news, oil prices rose sharply this morning after Iranian state media said that 2 rockets had struck an Iranian tanker traveling through the Red Sea. Brent crude futures were up 2.07% shortly after the news, with West Texas Intermediate futures growing similar gains as well. Now, the national Iranian oil company said the tanker had been traveling through the Red Sea off the coast of Saudi Arabia, 60 miles from the city of Jeddah. And an analyst from financial derivatives, Aisha Bello, joins me in the studio to react to this and more. It's good to have you, Aisha. Now, I'd like your thoughts on the current oil global forecast and the implication for Nigeria's recent budget benchmark. And you've already heard of the Iranian oil tanker attack. And of course, we saw a 2% jump in oil prices, as it were. So what do you make of all of this?
Basically, the increase in prices that we've seen this morning is more like a panic buying because the attack this morning sent panic to the market, and then when buyers are buying so that to avoid any disruption or anything in the future. But the thing is, just a few weeks back, like 3 weeks ago, remember there was an attack on Saudi Arabia oil, and prices went as high as $60 per barrel, $69 per barrel. But now they are back to normal because they've restored production capacity back to pre-attack levels. But this morning, the increase in price is, I would say the prices will still go back to normal because that is just the way the oil market is. Any small news creates panic buying and all. But for Nigeria, coming home, the budget has been benchmarked on $57 per barrel. And that's more like, I would say, risky because it's too close to what the market is now, what the prices are now, and it's if prices should go below that $60 per barrel, it's really going to increase fiscal deficits and external decline, lower external buffers for the country. Even the world largest oil traders, such as Vital, they actually expect lower oil prices in the next term, and that's because there's increase in production, there is the fear of slowdown in global economy, the fear of demand. So all these things, putting the oil price budget benchmark as $57 per barrel is really, really going to affect fiscal deficits.
Very good. Now, earlier on you talked about the issue of this prospect returning back to normalcy, after this incident. But what's the outlook for Brent at the moment?
It's increasing now.
Yes.
But Iran has come out that they've fixed the leaking. It's just a leakage. They fixed it. Though when the ships started moving, it started leaking back. But it's still markets. There is enough supply. There is the global supply. So, like I said, it's just panic buying. So prices will still go to what it was before the attack. All
right. Let's take a look at the LNG market. What are your thoughts there? What's happening there?
The prices have been declining, and that's basically because of ample supply too. But we're very close to the winter. We're moving close to the winter, so we're definitely going to see increase in the demand for gas, and that would boost prices. So we're likely to see increase in prices in the next, maybe like around that December, we'll see increase in prices.
But how, in terms of your outlook for the LNG price forecasting, how would you describe that?
That would be like around, the prices would be like around, so it's currently trading at $2.21, but I expect to increase to like around $2.5.
But over time, before this current forecast, how would you rate the price environment regarding LNG so far?
It's usually a seasonal commodity. It's usually, the demand is always there during the winter, and then demand falls during summer. So once the winter is there, we see demand go up. We see prices increase as high as 50%, and then when summer comes and demand is not there again, we see prices go as low as to even $1.something.
Despite the price scenario regarding the LNG, so what benefits are we reaping out of it for Nigeria? What do you make of it?
Nigeria, actually, LNG is like second largest export in Nigeria, and with the increase in price, with the decline in prices and the volatility in the market, it's really affecting our external reserves. So when the demand is coming, we'll soon start seeing demand. The demand will increase, so prices will go up, and that's a good thing for Nigeria because right now, our external reserves has been declining. It's below $42 billion now. So when the price of LNG increases, we expect to see increase in external revenue. So that will boost the external reserves and export earnings for Nigeria.
Very good. Now, let's take a look at the inflation figures to be released on October 14th by the MBS. There's a lot of expectations there as well.
Yeah.
So many people are looking towards that. So what are your thoughts there? What are the prospects? What are the issues? What do you make of it?
We actually expect inflation to reverse its declining trend. It has declined for about 3 months now. So we expect it to increase in September. And that's partly because of the border closure that has really affected a lot of commodities, such as rice. Rice has gone up, turkey price has gone up, chicken has gone up. And, it's supposed to be like a 28-day thing. It's supposed to be like a temporary thing. But then what Nigerians are wondering, is it really a temporary thing or a permanent thing? But according to Friedman, he said there's nothing as permanent as a temporary government program. So really, it's over 50 days now, and there's no end in sight. So basically, that is one of the major reasons why we see increase in inflation. Another reason is broad money supply. According to the Monetary Policy Communique, there was an increase of about 5.6% in the broad money supply in August. And that's basically because of the banks are trying to meet up with the September deadline, that initial September 30th loan-to-deposit ratio deadline. But now, so that was basically the reason why we saw increase in money supply. Also, credit to private sector increased by about 2%. So, but then it has been increased to 65%, and it has been increased at the extension. It has been extended to, deadline has been extended to 31st of December. So definitely we'll see increase in broad money supply. We'll see increase in credit to private sector. We'll see Christmas is around the corner.
Indeed.
Everyone is demanding that we'll see increase in aggregate demand. People with demand for commodities. So the increase, the demand is there, the money supply is there. These are factors that will support increase in inflation. So we're likely to see a trend in the inflation figures.
A trend indeed, but we'll talk about the all-elusive single-digit objective, as it were, in trying to manage inflation. So how would you rate efforts there in terms of that the inflation doesn't exceed the red line for most people, as it were?
Quite frankly, the government are making efforts to make sure the inflation is below a single digit, below double digits. So they are making efforts, but the thing is, when you make efforts to maybe to reduce inflation, there's always unintended consequences. When you make efforts to boost the economic growth, there's always intended consequences. Take, for instance, the border closure. It's not the intention is not to make inflation go up. The intention was to make the to reduce smuggling. But then there is an unintended consequences of inflation going up. So I'm sure the policies, they are going to, the next MPC meeting is in November. And so I'm sure they will take this into consideration to avoid any going two-way higher than what they're budgeting.
Very good. And still on it, your outlook for inflation in a few months and the implication, what do you make of it?
Oh, I expect inflation, like I said, to keep going up, and that's because the money supply is there, LDR of 65% to be met by 31st of December. The, what's it called, is there the money supply, LDR 65%. The minimum wage most likely will be paid before December. Everyone wants to celebrate Christmas. So I'm sure it will be there. The Christmas is there, demand will increase. So all these things will support increase in inflation. So we'll likely see a trend, upward trend in inflation in a few months.
When we talk about inflation, and just a one-off question here, there are other stakeholders as well in terms of the capital market, as it were. So, and we've been having some bearish runs lately. So what are your thoughts for this week, the capital market, and, as it were?
Markets has really been bearish, like you said, but then companies will soon start releasing their quarterly earnings, and that should at least have a positive impact on markets. Also, the budgets coming in earlier, it's been it's been a long time seeing budgets around this period, so that will put a positive sentiment to the market, and we should see a bit bullish sentiment in the market.
And of course, even talking about the budgets, as it were, just like you said, we haven't had a situation whereby it's been presented, quite early, as it were. But all the same, it's a good prospect there. And of course, the efforts to have it to the January-December window, as it were. All right. All right, Aisha Bello, Financial Derivatives, many thanks for your thoughts on those issues. It's good to have you with us.
Thank you for having me.